If you studied accounting in high school or college, you must be aware of the cash basis versus the accrual basis. However, this is the most important concept in accounting, and you must bear that in mind because your business might suffer because of that. So the cash basis rule means that costs and revenues are accounted only when paid. So the economic transaction equals the timing of the financial transaction. Whilst on the accrual basis, this is not, because costs and revenues are accounted when they arise. Which means that regardless of the moment you pay that, you should account in your books for costs and revenues. And I want you to think about of this example. So if you buy machinery, you pay 20,000 euros or dollars, whatever it is, but you do not write them off in your accounts or in your tax return the whole 20,000 because your machinery will be useful for 5 years, which means that you have to depreciate that through 5 years. So you pay 20,000 today, but you can account only for 4,000 in your books and your tax return per year. So this creates a problem. And also taxes are calculated on income made on the accrual basis, regardless of the fact that you have cashed it. So whenever you provide credit to your clients, well, you're basically anticipating taxes because the tax office said, good. So we calculate tax on that money, and then, I hope you collected before then you are required to pay me. So this is a very important thing. And whenever you plan for your business, most of the people fail to consider that. So the cash timing. And I want you to remember that no business has gone bankrupt on losses. They get bankrupt on cash crunches whenever they run out of money. And that's a good way to do so. You provide credit, but you pay taxes in advance. And the same thing happens on VAT, because you have to account for VAT on the accrual basis. So you raise your invoice, you have to pay VAT on that period, and then if you collect it 120 days later and in between you have to settle the liability, means that you advanced money to the government. So basically you're running on credit. And remember, you have to pay for that credit. So regardless of the fact that you applied for loans, well, there's no concept, there's no thing as free money, because you took that money, advanced it to the government, and you could have used that on your business, and your business might have generated a return. And that's the cost of credit you suffer on taxes. So it is very, very much important to understand how does this cash basis versus the accrual basis account for your business. So whatever you should do is running a cash flow. So you understand how much money you generate or you need in the process to feed it, to stay alive. Because that's the only thing that matters in business. Cash. If you have that, that's your oxygen, you can survive. If you don't have that, you're in big trouble. And unfortunately, the tax office doesn't think that way. So you should account for your expenses and revenue on the accrual basis, so you might pay tax on money you didn't even make, or possibly you didn't even receive or collected.